Hi there. Canopy growth, as the name says, keeps growing. Year to date, the stock price is up over 40%. A great return, a great performance. If you compare this with other companies, you'll see that Canopy is doing quite great. As the market cap is so small, of about 800 million Canadian dollars or around 600 million US dollars, the potential, the upside may be quite high if they report a higher growth rate, and maybe they can have other opportunities. Because as you probably know, the cannabis market, as you can see here, cannabis market is expected to grow by 34% a year. A compound annual growth rate over 34% a year. This is amazing. From 2023 by 2030. So, Canopy growth may grow a lot in the future. But of course, you also have to ask the question, what's the downside? What can go wrong? Because as you can see from the highest peak year to date, when the stock price was about $14, you have a decline over 57%. Maybe there are investors who bought at the highest peak, quite here, when the stock price was about $15. They thought that the stock price will go to the moon. But you see what happened. So you want to avoid declines like this. Don't invest when the stock price is quite high, overvalued, and not paying attention to the risk. That's why. Let's analyze together this company, Canopy Growth, and see their opportunities, how much you can earn from this company, and the downside, how much you can lose. Because if you don't pay attention to the risk, you may end up like this. A decline over 57%. And of course, if you look at the whole picture, you see a decline over or almost 80%. Now, if you can catch this huge upside in the stock price, for instance, in 2017, when the stock price was about $62, and then an increase over 600%, then you are great. You are a great investor, or maybe a great speculator. You have some insights, and maybe you know when to buy at the right time and sell at the right moment. And you have an increase over 600% in just 1 year. This is quite amazing. And this happened again in 2020, when the stock price was about $100 and then went up to $400, an increase over 200%. But then you see what happened. A decline over 98%. So you want to avoid this. Maybe another bump in the stock price, a new peak in the stock price may happen again. And you can take advantage from the current level. This can also happen because as the market cap is so small, less than $1 billion or around $600 million, and they have tailwinds from this cannabis market, compound annual growth rate over 44%, they might gain new opportunities. And if that happens, the entire industry may have new opportunities. And if that happens, then all the stock prices of those cannabis companies will go up. For Canopy, Cronos, Tilray, and so on. All the industry will go up if there are major changes in this industry, cannabis market. So that may happen. Again, you might see another bump in the stock price. Something like this. An increase over 100% in just a few months. You can have this. But as I said, focus also on the downside. What can go wrong? If you look at the revenue of Canopy Growth Corporation for the last 3 years, from 2022 to 2024, you look at the revenue here, right? So, in 2022, they reported 547 million Canadian dollars, as you can see here. But in 2023, the revenue has declined from 500 million to less than 400 million, 381 million. And in 2024, another decline. They reported another decline in the revenue of about 343 million. And this is quite bad. Now, if you also look at the net losses, their final earnings, you can see that for 2024 they reported a loss over 600 million. in 2023 a huge loss of 3.3 billion, and in 2022 a loss over 330 million. So as you can see, the fundamentals of this company are quite bad. Their revenue is declining year by year, and they have no profits. They reported a loss every year so far. So their fundamentals don't look that great. Now let's look at their balance sheet. Maybe their total assets have some value. As you can see, total assets are about 1.3 billion. And you look at the market cap of 885 million, the stock price is traded below their total assets. But you have to pay attention to their real assets, not intangible assets or property and equipment. Look at their cash. As you can see here, they have 170 million plus some short-term investments of about 33 million. So in total, they have over 200 million, around 200 million in cash. That's the money you can rely on. But be aware, as they have so many losses, no earnings, no profits, and the revenue is declining, they'll use this cash to fund their operations. So this money will be burned over time, the next year. So you compare 200 million in cash with the market cap of 800 million. This is good. Now, you also have to be aware of their debt. If you look at their debt, long-term debt, you can see that it's almost 500 million. And the short-term debt is about 100 million. So in total, if you do the math, it's almost 600 million in debt. They have 600 million in debt. And with 200 million in cash, you subtract their cash from their debt is 400 million net debt. That's their net debt, 400 million. And the market cap is about 885 million Canadian dollars. So their fundamentals don't look that great. Revenue is declining, they have a lot of debt and no profits. Why should you invest in this company? Of course, maybe if you want to speculate on this industry, cannabis industry, maybe new opportunities will arise and all the stock prices will go up. That may happen. But there is another risk you have to be aware of. And that is, guess what? Dilution. As you can see, from 2021, when they had almost 40 million in the number of shares outstanding, but then this number has increased to over or almost 80 million, 75 million. So they almost doubled the number of shares outstanding. And you know, when this happens, the stock price goes down. If they double the number of shares, the stock price declines by 50% in the long term. And that already happened. Of course, over the last 5 years. You see this, from 2021 to present, 2024. Now, year to date, no doubt, a great performance, over 42%. Maybe they'll continue this way. But when you look at their balance sheet, their fundamentals, revenues declining and no profits, this is a risky investment, quite a risky investment. As I said, as the market cap is so small and you believe in the future of this company, maybe you try their products because they have many brands in Canada like Tweed, Infused, and others. Plus, in the US, they also sell in the US some products. Here, as you can see their brand, CBD, organic, and international for therapeutics, medical use. So, they have presence in Canada, in the US, and other countries internationally. That's great. If they can expand or make other acquisitions, or maybe the entire industry will rebound, then also the stock price of Canopy growth will go up. And that will be a plus for you as an investor. Or a speculator, better said. Because an investor also pays attention to the risk. First the risk, and then the reward. So the stock price of this company may go up 2x or 3x in the next 1 or 2 years. Or in the long term. That may also happen. But focus on the risks first. This company has a lot of debt, as you've seen, over or almost 600 million. Their revenue is declining. You can easily see their past performance. 500 million in 2022 and 2024, 343 million. And on top of that, no earnings, only losses. Over 600 million, over 3 billion, over 300 million. So why would you take this risk? A declining revenue, a lot of debt, and no earnings. Why do you want to do that? Maybe you believe in the future of this company, as I said. You like their products. You use them every day, and you believe that this company will be a success in the next 5 to 10 years. That's great. Pay also attention to the number of shares, that they don't go up too much. And maybe one day this company will become profitable, and if that happens, then the stock price for sure will be more than 2x. You may have an increase like this in just 1 year, over 160%. That can also happen. But it's up to you. If you want to take that risk and don't pay attention to the declining revenue, their debt, and no profits, and maybe you focus only on this trend, the global cannabis market, which is expected to grow by 34% a year, compound annual growth rate of 34% a year. Maybe you are lucky and your stock price, your investment, will more than double in the next 5 years. That may happen, but be aware of the risk. This company can also go bankrupt. That's the risk. That's why you have to be aware of it. So it's up to you. If you want to take this huge risk, maybe you invest just a small portion of your money, of your portfolio, let's say 1% or less than 1%, 0.5%, then you might want to play with this company and see what happens in the next 5 to 10 years, especially if you are a customer of Canopy. But don't think that if you see here growth, also the stock price will grow a lot in the future. This is just marketing. Don't believe that. So, if you have other questions about this company, then let me know in the comments.